Ladies and gentlemen, good day and welcome to Kolte Patil Limited Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shiv Mittu from Adfactors. Thank you, and over to you, sir.
Yeah, thank you. Good afternoon, everyone, and thank you for joining us on the Q1 FY23 results conference call of Kolte Patil Developers Limited. We have with us today Rahul Talele, Group CEO, and Pawan Lohia, Head Finance. Before we begin, I would like to state that some of the statements in today's discussion may be forward-looking in nature and may involve certain risks and uncertainties. A detailed statement in this regard is available in the Q1 FY23 results presentation that has been sent out to you earlier. I would now like to invite Mr. Rahul Talele to begin the proceedings of this call.
Good afternoon, everyone. A very warm welcome to everyone present on this call, and thank you for joining us today to discuss the operating and financial performance of Kolte Patil Developers Limited for the first quarter of FY23. I would like to begin by sharing with you our views and takeaways on the prevailing macro and real estate environment, followed by a discussion on key initiatives, broad strategies, and an overview of the highlights of the first quarter performance. Pawan will then take you through the key financial highlights. We also look forward to taking your questions and suggestions during today's call. To start with some thoughts on prevailing macroeconomic scenario that has a bearing on consumer spending behavior and therefore on our business as well. We believe that the recent news flow and data dynamics are indicating that India is once again getting to be well positioned for expansion in domestic demand. We see government action, the reform agenda, and the policy framework supporting an upswing in private sector investment and productivity improvements across sectors, thereby creating a virtuous cycle in the economy. After a long period of adjustment, financial sector's balance sheets are looking more robust, indicating a turnaround in the fortunes of a wide variety of borrowers. This also means that there is a greater resource availability to spur the next set of economic growth drivers. The recent impact from oil and commodity price escalations had impacted sentiment. With prices cooling down, more stability is expected in the economic environment, creating confidence for improved spending and more positive consumer behavior. From the perspective of the Indian real estate industry, as in the case of several other sectors, recent developments have caused some escalation in raw material prices. However, the key difference here is that unlike many other industries, real estate has the drivers to create a pass-on mechanism for cost escalation. This is especially true for strong brands with efficient execution capabilities and solid reputation built over many years of building customer confidence and delivering to expectations. We believe Kolte Patil is one such brand, and our strong market position is now reflecting in the positive data points that our business is generating. Our business is also displaying several other elements of strength based on 3 decades of focused efforts to establish a well-respected franchise within our core customer base. From the customer's perspective, we have built long-term engagement on the foundations of trust. From the business standpoint, we have been an early adopter of the manufacturing model in the real estate sector across the 23 million square feet of area delivered till date. We are now bringing in elements of visibility, predictability, and sustainability into our operating model. We are focused on expanding visibility within our target audiences in the focus cities of presence and deep engagements with all other key stakeholders as well. Predictability of thinking, planning, and process that will further strengthen our corporate framework. Sustainability of practices that create a resilient structure to drive growth. We believe these attributes are essential to our ambitions of graduating from a mid-sized real estate player to creating a large presence in the industry over the next few years. Now talking about operating performance, We have entered FY23 carrying the momentum of the previous year. That saw Kolte Patil deliver in line with our stated pre-sales guidance in a weak operating environment. This was largely on the back of a sustenance project-based portfolio. During Q1 FY23, on the operational front, the company's sales booking stood at 0.61 million square feet with a value of 445 crores. A growth of 53% in volume and almost 79% in value compared to Q1 of last financial year. Along with sales bookings, project execution activity remained strong and collection from customer increased to 474 crore during the quarter compared to 279 crore in Q1 of the preceding year, a growth of 70%. Price realization has seen a significant jump based on several factors, including higher realization in ongoing sales from projects across the board, product mix contribution from our Pune-based inventory, and strong sales momentum in Mumbai. This has led to an improvement in APR from 6,418 in Q4 FY22 to rupees 7,260 per square feet in Q1 FY23. We now expect to deliver 25 to 30% sales growth by value in FY23. We have a pipeline of projects lined up for launch in the coming months across Pune, Mumbai and Bangalore with aggregate sellable area of 8.95 million square feet and top line potential of around 6,300 crores. We also remain focused on meeting our business development target of rupees 7,000 crores of top line potential for the current financial year. As a part of this plan, we continue to evaluate opportunities such as acquisition of Pune-based Sampada Realties announced yesterday. This particular transaction provides a revenue opportunity of rupees 1,400 crore at Kolte in Pune. With all regulatory approvals in place, and we expect to start launching in phases in the current quarter itself. We will continue to add more such projects to our portfolio by leveraging our market visibility and balance sheet position for growth. Today, with the residential real estate segment in structural upcycle, we expect the demand momentum to continue for the next 3 to 5 years, and we are positioning our organizational resources accordingly. Despite the rise in interest rates, affordability is still at its best, backed by strong wage growth trends. The underlying structural drivers of demand remain strong, and customers continue to favor developers and projects that provide comfort of reliability, credibility, and strong track records. We see this as an opportunity to take the leap of faith into the future. We are now targeting rupees 8,000 to 9,000 crores of cumulative pre-sales over FY23, 24, and 25 together. This compares with rupees 4,300 crores of pre-sales by value over the last 3 years. We also look to drive forward on our business diversification objective with our 40 to 45% revenues from Mumbai and Bangalore by FY25. Underlying this transition will remain our structure of business discipline that has remained with us through the years. We will continue to drive returns on capital, driving growth with cash-like partnership and engagement models. With that, now I hand over the proceedings of this call to Pawan to provide a financial overview.
Thank you, Rahul. Good afternoon, everyone. I will now briefly take you through our financial performance for the first quarter FY23. Based on CCM-based accounting, in Q1 we clocked revenues of rupees 200 crore, whereas EBITDA for Q1 stood at rupees 46.9 crore compared to EBITDA of rupees 40.5 crore in Q4 FY22. Our net profit after tax post minority interest came in at rupees 21.2 crore compared to rupees 26.8 crore in Q4 FY22. Here, we would like to remind you that recognition of revenue and profits are dependent on the timing of project completion based on statutory accounting guidelines. We see a strong drive on the deliveries front in FY23. Linked to project completion and deliveries would be higher revenue recognition in the ensuing period. Our net debt to equity stands at 0.15 as on June 30, 2022. Our focus will remain on maintaining sales performance, timely execution and cash flows, which will continue to drive P&L performance over time. On that note, I conclude my opening remarks and would now like to ask the moderator to open the line for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, you may enter star and one on your touchtone telephone to ask a question. We will wait for a moment while the question queue assembles. The first question is from the line of Pritesh Sheth from Motilal Oswal. Please go ahead.
Start to the year.
Sorry, sir, you may now start with your question.
Okay. Hi. Congrats on a great start and the deal you announced yesterday. Finally, good to see some progress on business development. So firstly, on business development, one specifically on the deal, prima facie it does seem, very attractive. Total investment of 120 crores for, that much of size. And project is largely plug and play. You are hoping to launch the first phase in next quarter. So, if you can just describe a bit in terms of how, you managed to get this deal attractively valued and, what sort of margin expectations are we targeting?
Okay. Thank you, Pritesh. This is Sampada Realties has started this project in 2007. They have acquired this property from landowners and launched this project in 2011. But in last 8 to 10 years, they have just delivered 8 to 9 lakh square feet. And there were multiple parties involved in this transaction. And the potential of this transaction is around 2.5 million square feet. We are expecting around a top line potential of 1400 crore over here and EBITDA margin of approximately 24 to 26% of EBITDA margin. So in terms of the absolute number, in the range of 1300 to 1500 per square feet EBITDA margin we are expecting from this project. So Pritesh, during our earlier calls, I used to always say that we always do a very stringent due diligence and various sets of, we have the various sets of parameters to assess the transaction. And considering the leadership position in Pune, landowners and even the stock project owners and the developers, their first choice of opportunities with the Kolte Patil as a developer, and that is how we got this deal. So there were multiple complexities involved in this deal, but somehow with the help of the cohesive working internally, with the help of the strong consultant onboarding on this to provide the various technical, legal, and as well as the financial due diligence, since we were entering into a live company, though it is the only asset in that company. So considering the complexity and considering the brand legacy and the brand capabilities in the Pune market, we could close this value deal for us.
Okay, got it. And so assuming kind of a distress, so any liability that we are carrying from the company that will be part of our books?
No, Pritesh, there is no liabilities for us. The only thing is we have to complete the ongoing phase over there, which is of couple of lakh square feet, and we are confident that we are going to complete that in 8 to 9 months.
Right, got it.
It is already factored in that the cost 120 crores.
120 crores. Okay, got it. And since you have, I think for the first time, given a clarity on what is the size of business development that you are targeting this year. Firstly, how much is the pipeline that you are looking at to target that 7,000 crore of GDV addition this year? And in terms of what areas you are looking at, it's largely again Pune or it's mix of Pune, Mumbai, Bangalore across the 3 markets?
Pritesh, to be very honest, to begin with this financial year, we have set the target of 7,000 crores of business development activity, with the split of say maybe 7 to 8 million square feet of BD in Pune, around 1 million square feet of business development in Mumbai, in the city of Mumbai, and around 1 to 2 million square feet in Bangalore. So we are still continuing with our guidance, and there is a strong pipeline. I have already mentioned in our earlier call as well. At the same time, let me accept that our due diligence and various process is very stringent, and because of that, maybe it is taking a little more time, but we are confident that we are going to achieve this target in this financial year itself, considering the fact that there are multiple advanced level of discussions going parallelly in Pune, Mumbai and Bangalore. In Pune, we are, at this moment, around 4,000 crores of top line worth potentials are in a very advanced stage of pipeline. In terms of area, it is close to 6 to 6.5 million square feet. And in Mumbai, we are targeting a closure of 2,000 crores of top line worth projects. These are largely, since we have a strong presence in western Mumbai, now we are targeting the central and Navi Mumbai suburbs, so that we'll have the good visibility, and that is in sync with our Mumbai strategy. We want to restrict our Mumbai project portfolio, project size in the range of say 300 to 700 crores of top line at one project, and at the same time 1.5 to 3.5 crores of individual unit. So we are confident that we are going to achieve this. And in terms of Pune, we are targeting a new micro markets wherein we don't have the presence. All these deals are such, like Kolte is one of the examples. So other deals are also, we are targeting in other micro markets wherein the sales velocity is already there. There is a good amount of demand, competition is selling good, and we want to enter those sectors.
Got it. Thanks for that clarity. I have a couple of more questions. I'll join back with you. Thanks for the answers and all the best.
Thank you.
Participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Shreyans Mehta from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity. So just wanted to understand, this quarter we've launched only one project, right, Giga?
Yes.
So if I exclude that, roughly the ballpark number in terms of pre-sales is at, 0.52. So, I understand we are actively looking at the BD pipeline on, aggressively, but unless and until, we do not see scale up in the existing, especially on the LR, how can, I'm trying to understand how do we, we are talking about 8,000, 9,000 odd crores, and unless and until we see some, aggressiveness as far as LR project is concerned, so just wanted to understand the thought process out there.
Okay. Thanks, Shreyans. See, we have given a details on the priority launches. So that is to the tune of 6,300 crores across geographies. And we have only classified all those projects wherein we are actually in a very advanced stage of approval. So let it be Kolte is completely approved, or buyer projects is in very advanced stage of approval. And we have received all sets of approval for our Life Republic projects. We have received the key approval of environment clearance for around 4 million square feet. And same is the case. In fact, for the Sukh Niwas project, we have received which is in Mumbai, we have received the CC today. So we are going to apply for the RERA. In the Golden Pebbles, which is again in Mumbai, we have received the IOD and the society has vacated. Now the demolition work has begun. So in in next 30 to 45 days, we'll be receiving a CC for that as well. And Bangalore Raga, we have already applied to the various authorities for the approval. So we have classified all these priority launches, where is the possibility of definitive launch right from next 15 days to next 3 to 4 months. So all this potential will get sanctioned, and out of this, depending on the project size, we are going to launch partially. So we are targeting launches of close to 2,500 to 3,000 crores in next 3 to 4 months.
Sure. So, sir, just to put it other way, I mean, in terms of, if I look at the LR run rate, we are still not even at the pre-COVID levels, the peak which we've done. So, how do you think, that probably by FY23 end we should see that scaling up?
Shreyans, I believe we have achieved the highest sale in terms of value at Life Republic last year. So
Right.
as compared to the pre-COVID numbers, and not only in terms of value, but as well as in terms of the per square foot price realization. Since though it was a sustenance sale, I mean the leftover inventory or the partial leftover inventory, we could improve our price realization in the range of 3% to 7-8% in the Life Republic project. So there is a good possibility of additional value additions, as well as now since we are running a township model with a supermarket of products. So there is a price range of 35 to 80 lakhs as on date, and with this new launches which are mentioned in that slide, our price range is right from say 30 lakhs to 1.4 crores. So that will give us additional volumes at LR, and considering the demand for the premium houses or the spacious houses, we are confident that this year itself we are going to surpass significantly as compared to the delivered number of last financial year.
Got it, sir. Got it.
At the same time, since there is a mega, this is a big township, we are parallelly looking for the strategic monetization at LR. All those potential which is going to be live after 7-8 years. Instead of that, we are trying to monetize that, and if there is a possibility to acquire projects at other level, we are evaluating that as well. And also at the same time, we are in next 3 to 4 months, we are planning to launch a 24K vertical at township that will again add a volume and value at township. And we are also targeting a plotting segment at township. So all put together, we are confident that we are going to achieve a significant growth at township level.
Got it, sir. Got it. So my second question pertains to a realization. So if you could quantify, how much is it because of the price hike and how much is because of the product mix?
Out of this, our last quarter realization was 6420, and this is in the range of 7260. So
Right.
there is a delta of around 800 rupees. So out of this 800, so this is a 13 to 14% of improvement in price realization. Out of that, say 3 to 4% is just because of the improvement in the prices at the project level itself. The rest is a combination of a contribution from a premium project and and change in a product mix.
Got it. And sir, this 3 to 4% price hike, is it that we've taken at one go, or probably we might see in coming quarters as well?
There is a certainty of a price improvement in the coming quarters as well. So there is a price mechanism we follow. On a quarterly basis, we try to freeze the price for the entire company level, and we review that on a monthly basis. And we are now targeting all those new projects that we are planning to launch, mentioned in that priority list. Over there, as compared to our business plan assumptions, we are targeting almost 5 to 7% extra at the time of launch itself.
Got it. Sure. Sir, and last question from my side. In the slide which you've given on priority launches, can you just give some tentative numbers or in terms of when also, for example, Baner, when you expect it to launch? Same for Pimple Lake and Tathawade?
Baner will get launched in next 2 months. In terms of Pimple Lake, it will get launched around in the Q3 or early Q4. And Tathawade, we have received the all set of approvals, and it will get launched in another 30 to 45 days.
30 to 45 days. And same for the Mumbai projects?
Mumbai projects, in fact, we have received all sets of approvals. Now the vacation and the demolition process is going on. Sukh Niwas will get launched in next 20 to 30 days, and Golden Pebble in another 30 to 45 days, or max 2 months. And for Life Republic, certainly we are confident that all these projects can get launched in next 60 days.
Next 60 days?
Yes.
Okay. Sure, sir. Thank you very much and all the best.
Thank you, Shreya.
Thank you. The next question is from the line of Shivam Prashar, individual investor. Please go ahead.
So I would like to thanks for the opportunity first and congrats on a good set of numbers. My question would be, sir, how much time will it take for the execution part for us to happen for the ongoing construction that's happening, and what are the margins that you expect?
Every quarter or every year we are launching a project. So, and there is a difference in the height of the building. So, every project has a different set of RERA timelines. So, in the range of say 2 years to 4 years from a RERA perspective. At the same time, all this ongoing inventory, we are confident that we'll be finishing the deliveries in next 18 to say 3 years, 18 months to 3 years. In fact, this year, again, we are confident that this year will be very strong in terms of deliveries. We are targeting a deliveries of close to 3.5 million square feet in this year itself.
Can you quantify the, in rupee terms, sir, please, the delivery which you are targeting this year in 3.5 million square feet?
Sorry,
sir, can you just tell me the rupee value of this 3.5 million square feet which you are targeting to deliver this year?
Okay, so it will be in the range of 1,600 to 1,1900 crores.
So this will be executed this year only?
Yes, yes.
And how much do you see in the next 24 months? Like
next year, since we have sold our sales for next years, again our deliveries will be more than 3 million square feet. And since the price realization, if you see the trend in last few quarters, there is a big jump in the price realization. Considering that fact, there will be maybe we'll be targeting more than 2,000 crores of revenue recognition in next financial year.
Okay, so this will be the execution part. And sir, answer the margins on that. The margin.
So in next 3 years, we are going to deliver around close to say 8 to 10 million square feet of deliveries.
Okay, right. And sir, what would be the margins for the first 3.5 million square feet deliveries you will be looking, and for the next year the same? Can you tell that? The margins and any fluctuation in margins you are seeing due to this commodity pricing, any revision in prices or revision in margins also?
So let me answer the second part. So there is hardly a fluctuation in terms of the cost of construction, since all these projects which are going to deliver in this year is already in the finishing stage, and the commodity price uptake is for all those items which is required at the beginning half of the project. So there is a very limited impact in terms of the from the perspective of commodity price hike. We are targeting a EBITDA of around say 24-25% with a PAT expectation of around 12 to 14%.
Okay, sir. And you won't revise these? These would be revised upwards only, not downwards, I guess.
Yes, certainly.
Okay, and sir, can you just if you just a general question, if you can highlight me the market share percentage, if you have gained any market share or lose any market share in the certain market?
So the Pune market, from various reports, Pune market is in the range of say 40,000 odd crores to 60,000 odd crores, and we are achieving around say 1,100-1,200 crores in Pune. So we are consistently in a top 5 position in Pune since last 20-25 years, and maybe we are the only developer who is there since beginning.
Okay, and the other markets? Any market share number and any market share percentage if you and the other markets? So you're losing market share in Pune, or you are gaining market share, or you are just maintaining the market share? I wanted to listen to that.
Let me classify this. See, Pune has grown so big. So we have classified Pune into various micro markets, wherein we have the projects we are consistently achieving our market share. In fact, there is a betterment in our market share, even if there is a competition. And hence, what I discussed earlier, we are targeting all those new micro markets wherein we don't have a presence. And that will give us a very good amount of delta in terms of volume. So there are multiple micro markets we are targeting to enter, and with that possibility, there is a good amount of room left to double our volumes in Pune itself in next, maybe in next financial year.
Okay. And sir, any percentage number? Yeah.
Sorry, sir, you may come back in the queue if you have further questions.
Oh, okay. Okay. Thank you so much. Thank you.
Participants, if you wish to ask questions, please enter star and 1. The next question is from the line of Pritesh Sheth from Motilal Oswal. Please go ahead.
Hi, sir. Thanks for the follow-up. So again, on Life Republic, good to see launches ramping up, and we are now bringing in variety of products with plotting and the 24K project as well, right, within the next 24 months. Previous participants rightly highlighted as well that we have been in 8 lakh square feet to 1 million square feet range since quite some time now. So with this ramp up in launches and bringing in variety of products, do we expect our scale to improve in Life Republic from 1 to maybe 1.5 million square feet on an annual basis?
Pritesh, certainly we are confident that about our, the more volumes coming from Life Republic. So in next 12 months from now, we are gunning for 1.5 million square feet of pre-sales number at Township.
And this plotting is just one opportunistic thing that you're doing, or we have a larger land size that we have dedicated for this plotted development in this township?
No, since it is a township, as I mentioned earlier, we want to go with the supermarket concept. We want to give various varieties to the customers, and nowadays plotting is in demand. And considering that we have already delivered one sector in township. We started with a sale rate of 3,800. Last units we sold at more than 5,000 rupees a square feet. So considering that positive momentum, we want to encash that opportunity at a limited level in township.
Okay, got it. And in terms of realization, we have already reached around 5,500 rupees per square feet on an average. Considering how strong the demand is right now, across cities and for our products as well, do we envisage to scale up this further to around 6,000, 6,500, where utilizing the additional township FSI that we have of 1.7, also starts to make economically viable sense for that matter? Is that the plan now?
Yes, certainly, Pritesh. So there has to be a right balance between volume and value. And considering that we are gunning for the step-by-step approach, now we are planning to launch new sectors with the starting rate at 5,400 to 5,500. And after the various categorization of the inventory, easy to sell, moderate to sell, and difficult to sell, our average realization will be in the range of 5,700 to 5,800. That is our projections for this set of next launches. At the same time, there is a good amount of possibility of consumption of that additional FSI as well. Considering the fact that I have mentioned during our earlier interaction that there is if you touch that 6,000 level, then we can certainly go beyond 70 meter of development, and we are certainly planning to come up with that kind of development through 24K product.
Okay, got it. And roughly how much that increases the potential of LR if we go for that higher FSI? I mean, right now we are at 11 million square feet of additional development that we have, which is still not launched. What would be the additional potential that we may look at?
So, LR total potential, we have given that note in our this presentation as well. So there is a potential of more than 20 million square feet at this moment at township.
Okay, 20 million. So right now at 1 FSI we are still at 11 million square feet additional, and it can go up to 20 million.
Yes. So this new launches of around 4 million square feet, 3 million square feet is a part of this 20 million.
Okay, okay.
It is a combination of residential and economic activity. So largely residential of around 13 or 14 million square feet, and 5-6 million square feet of economic activities, which is largely a commercial development.
Got it, fair enough. Thank you very much. That's it from my side. All the best.
Thank
Thank
you.
you, Pritesh.
Participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Shreyans Mehta from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity. So just a follow-up in terms of cash outflow, just wanted to understand what is the pending construction cost to be incurred for this year and next year?
So from the ongoing projects, the pending cost which is to be incurred is around 1,500 crores. So out of that, we are planning to spend around 600-650 crores this year, and the balance in the next 18 odd months.
900 odd crores in next 18 months.
Yeah, that's right. For the existing launch projects.
Got it. And for the recently acquired project and to be launched, what would be the rough indicative number in terms of investments?
So for Kolte project, the investment amount is 120 crores. And
Right.
all those projects that I have mentioned earlier, we have to invest obviously in a tranches of around 6 to 9 months. So our investment requirement will be in the range of 400 to 500 crores.
400 to 500. So sir, given that probably this year we have an aggressive bid pipeline, as well as we have certain portion of construction also moving in, how do you see the balance sheet moving from here on, especially in terms of leverage?
So see, at this moment our net debt to equity is 0.15, and
Right.
there is a internal approval till 0.5. So there is a good amount of delta left of around 300-400 crores to further leverage. So that is our the plan B, or plan A is through internal accruals and through what I mentioned earlier, through strategic monetization at Life Republic, and then backed by this leveraging, we are confident that we'll achieve our targets.
Got it. Sure. And then lastly, dwelling more on ILR, just wanted to understand, are we in talks with any players like we had the earlier where we have monetized the land with Planet? So are we in talks with any other players or with the same player?
See, we are in discussion with a couple of players from a pure equity infusion, like what was the structure at Planet.
Right. Okay. So it's still at the initial stage, or?
Very initial stage. See, Shreyans, as a group, we have, if you see the history of group, we have relied on the various private equity partners.
Right.
So we are in discussion, because since we are launching multiple projects, we are in discussion with private equity players.
Got it, sir. Got it. That's it from my side. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask any questions, please enter star and 1. As there are no further questions, I would now hand the conference over to management for closing comments.
Thank you once again for your interest and support. We will continue to stay engaged. Please be in touch with our investor relations team for any further details or discussions. Look forward to interacting with you next quarter, and wish you all a happy Independence Day in advance.
Thank you, sir. On behalf of Kolte Patil, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.